Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and today's Thursday, September 25th. Got a decent rally going. It seemed cautious. Got a little overbought. Reacted to the downside late in the day. And then after the close, more confusion out of Washington. They don't have a deal. They can't agree. I'm not surprised. So the market's down a little bit more in after hours. So, price earnings ratio doesn't matter. Book to bill ratios don't matter. Fundamentals don't matter. Technicals don't matter. It all matters whether or not this government, these schoolgirls that are running the government, and I apologize in advance for all the schoolgirls out there because they could probably do a better job. They're all arguing about, no, I want this in the bill, and I want that in the bill, and in the meantime, the market is held at bay while these children run our government. So, the bright point of the day is the rally, I think, gave us a new benchmark that we can work off of. So in the when we go through our major indexes, which is the only thing we're going to look at tonight, I'm going to point out and show you what possibly could be developing. I feel like I'm trying to defend this Joe Granville indicator, but you know, I think it's worth defending. You'll see what I'm talking about. In the meantime, the psyche of the market has been damaged. You know, even if this turns out to be the bottom or wherever the bottom is, I don't expect any kind of rip-roaring rally after this. It's going to take some time. First of all, the SEC has removed a number of the players, and hopefully they come back on, I guess it's October 5th or October 10th, whatever day it is that this ban lifts. Speaking of the ban, the hedge funds have come up with a new sneak around the rule. They're going to create a new product that's going to allow them basically to be able to short these stocks. That's just what we need, is a new product. We always know what happens with the new products. Anyway, and not only that, I mean, the main guy on the street, you say to him, oh, let's invest in the stock. With the news that's going on right now, he's wounded too, psychologically wounded. There's no way that people are going to come flocking back into this market, even when this problem is resolved. It's going to take some time. The psyche's been damaged. But that's not going to keep us from analyzing what's going on. So let's get to the charts, and I'll show you the new benchmark that I think has been created and where we can go from here and what we can expect. Now, tomorrow there's going to be some weakness because they're haggling again over the plan. So until it's signed, you're going to have spits and spurts and uncertainty, and you know, and the market hates uncertainty. So let's take a look at the charts, and I'll show you exactly what I'm talking about. Don't go away. I'll be right back. Okay, this is the Dow, and the new benchmark is this new low here. So we don't have to wait for this to get taken out. If this low gets taken out, that's just going to add to the negativity. But in the meantime, this could act as this could turn out to be the successful test of the lows. I'm not saying it's going to be. I'm saying it could be, because it is a new benchmark we have to work with. The other very interesting thing I notice about this spot right in here is that it matches up with the original low over here, where the Joe Granville first 600 new lows were made. Remember? And I got bullish and I said that's an important low, and we caught this whole entire rally, and now we're back down again. We broke the low, we've kicked back through it, and now we've come down, and lo and behold, so this may turn out to be a key spot. We may look back on this and say, wow, look at that, isn't that interesting? So I can't put a technical name to it, except that I find it very interesting that the pullback after the big rally stops basically right there. Very interesting. So keep that in mind. In the meantime, let's take a look at this new benchmark we have here. And in order to see it really clearly, we're going to have to take a look at the hourly chart. Okay, this is the Dow hourly, okay? This is where I first told you that my indicator was way oversold, right in here. All right? It got a little more oversold, and then we've got our rally. Okay, now, this is the low that we need to hold. So what I can envision is the market coming back down tomorrow, testing this low, holding, and then rallying back up. And if that happens, we have a pretty good chance that the market may try to dig itself out of this area. Let's go back to the daily, because what we're trying to do is we're trying to get the market to break out above this level without going down below this low first. So we'll have to see how it develops, but like I said, the market gave us a new benchmark today with that rally. We'll have to see what happens now. So if we pull back and this low gets held and we start back up again, maybe, just maybe, we can get something going. But I really find it very interesting about how this market pulled back right to this area here. Let's take a look at the transportation average. The only bullish thing I can still say about this is that it's still holding this low. Other than that, there's nothing bullish looking about this chart at all. It really isn't telling me much at all. Russell 2000, similar. Still, there's no bullish formation yet here. There's no new benchmark. This could very easily come back right down and test this old low here again. So I'm not getting any new benchmarks in this yet. Could happen tomorrow. The SPYs, same story with this new benchmark down here. We'll take a look at the hourly. This is the low that we need to hold. I can see it coming back down in the morning because of the confusion in Washington. As long as this holds and we don't come all the way down into here, the market has a chance. QQQs, similar picture. This is our new benchmark. Look at the hourly. This is the low. So I can see it coming down to this low, regrouping, and starting back up. If that happens, then the market has a pretty decent chance of trying slowly, very slowly, to dig ourselves out of this. Because what we're trying to break out of here also is we need to get above that level there. But as long as we can get some sort of a little upward staircase going, if we can better this high in the next day or two. Unfortunately, these markets are all weak after the close because of the confusion again in Washington. For instance, I'll give you an example. Apple, best acting stock, I like to watch it as one of my indicators. The stock was up over $4 today at the height of the rally. Then it pulled back a little bit when the market got overbought and that little pullback happened. But now, after the close, because of this confusion in Washington, not only did it give back the whole $4, but it's down another $1 after that. So this is what this indecision is causing in the marketplace. I don't know if they're aware of it or not, but every trade depends on what comes out of Washington. Now, that's not the way a stock market is supposed to operate, but that's the way this market is operating, and that's why it's so treacherous, and it's just not a smart thing to make any major decisions right now until the picture becomes a little clearer. The landscape is not clear. Although we're trying to see our way through it, you know, it's challenging with what's going on in Washington. Okay, so that's how I see it. That's my view of the market. Until tomorrow, this is TK signing off.